Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Well, it's Thursday today. I'm coming to you a day early. A couple of different reasons. One, the Federal Reserve had their meeting, and that ended yesterday, and the market was really anticipating and wondering what was going to go on with that, so I wanted to let you know as quickly as possible. Other reason is that I won't be in the office for the majority of Friday. Our oldest daughter actually is a freshman here in college, and so we're heading off to the University of Alabama for Parents Weekend, and pretty excited because I get to see her for the first time in over a month, which is kind of weird. So anyway, that's why I'm not coming to you on Friday. But again, important news yesterday. Federal Reserve had their latest meeting and the press conference afterwards, and as you've probably heard that there was no change to short-term interest rates, to the Fed funds or discount rate, which is what the market expected. Wasn't really expecting a big surprise, but there was a potential for a surprise because they have been talking about increasing rates. And so after the announcement was made and during the question and answer, what Chairman Janet Yellen said is that overall the Federal Reserve is pretty pleased with the way the overall economy is going. Job growth has been there. There hasn't been a whole lot of wage pressure, and their expectations for GDP are kind of like in line with what they were expecting. GDP is not growing. I mean, the Federal Reserve hopes that we're going to have around 2% GDP every year, and that's about where we're at, and so they're overall pleased. But one thing that was a little bit different is there was actually 3 dissenters this time wanting to increase rates. They were dissenting from the Fed policy of keeping rates unchanged. They wanted to increase credit. So that's more than what had been previously. So right now, everybody loves this. The stock market is doing better. Mortgage-backed securities are better. And so we're probably should finish the week better than where we ended last week. We have seen a positive movement in terms of mortgage-backed securities and bonds, but also the stock market likes it. The stock market likes it because there's an accommodative policy. Companies can continue to make money based upon just low interest rates and not have to really grow. They can just keep debt levels low. And mortgage-backed securities like it because there's really the Federal Reserve doesn't believe that there's more inflation. But bottom line is, though, too, is expect a increase in December. The Federal Reserve is telegraphing that. They're probably going to increase short-term credit by 0.25% at the December meeting, just like they did last year. Now, also remember, last year, when they did that, we saw interest rates improve. So your average consumer is not going to know how that's going to work or whatever, but so you can maybe use it to your advantage in that the consumers are going to see that interest rates go up, and it's going to spur a little bit of buying because they think interest rates could be affected later on down the road, but it probably is going to have a positive effect, believe it or not, because the aspects for inflation, which is Federal Reserve's archenemy, goes down when the monetary policy tightens a bit. So, and in the face of the fact that we're not growing at a huge rate, so the Federal Reserve isn't really trying to curb inflation happening now. They're trying to curb inflation potential later, but also the reason that they're doing it is because the Federal Reserve wants to put some more bullets back into the gun when we go into a recession, and they can ease credit and become more accommodative. So as long as global yields don't go up dramatically, and that could change things, or we don't see new data that presents itself, we're probably going to see a Federal Reserve increase in December. The odds are very high in that regard, but don't think that that's going to necessarily be a terrible thing for long-term interest rates. In addition to the Federal Reserve meeting, we also did see a lot of economic data released, and so this is going out to primarily real estate agents. So a lot of the data was in terms of real estate. So let me kind of tell you what we saw. We first saw the FHFA, Federal Housing Finance Authority. They came out with their numbers. They measure appreciation on the conforming loan amount, and it showed that appreciation went up by 5.8% on the year-over-year number versus 5.6%. So we're showing an increasing rate of appreciation there on a national basis. NAR also released the statistics for existing home sales, and that was actually down 0.9%. But that's coming off the heels of some of the best numbers we had seen in the previous months before. So while that is down from what it was before, it was at record levels, so it's still at a very good level. Also, some interesting statistics that the National Association of Realtors released in that report was that they believe, the year-over-year numbers show appreciation on a national basis happening at 5.1%, so a little bit less than the FHFA, but this also, the NAR statistics take into account the jumbo side of the equation, which those just don't appreciate quite as quick, so that's the difference there. Also saying that first-time home buyer percentage of the markets have actually come down. It was in the mid 30%, and now we're at about a 31%, so not as many first-time home buyers are accounting for the percentage of overall home sales, so it's only 31%, so that's been decreasing. Cash buyers are at about 22%, and investors have gone up from 11% to about 13% of the market. So there's some statistics for National Association of Realtors. So that's what happened with the Federal Reserve meeting. No big surprises, but continued telegraph that December, plan on it. Going to be, they don't want to do anything in November. They probably won't do anything in November because they do have another meeting, but there's no press conference afterwards, and it's right before the election. Typically, Federal Reserve doesn't do anything right before the election because they don't want to spook the markets and affect the potential results of the election. So that's what's going on with Java with Jared. If you have any questions, always please feel free to give us a call. Even though I am going to go visit my daughter, my team is working hard behind the scenes, so if you're working this weekend, so are we. Give us a call and we'd be happy to help. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.